Hey, what's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. If you want 3 free stocks, Weeble is going to give you 3 free stocks. When you open a new Weeble brokerage account, put at least 1 penny in that brokerage account. They're going to give you 3 free stocks valued up to $3,300. So after this video, guys, I want you to go down to the description box of the video. Click on that Weeble link, open up your new Weeble brokerage account, put at least 1 penny in there, and go get that free stock and go get that free money. Well, guys, the stock market has been in turmoil in the month of January 2022. I made several videos about that turmoil and what I'm going to be doing to be able to position myself to take advantage of buying my favorite companies and my favorite ETFs while they're currently on sale. The question I continue to ask myself is, are we at the bottom? Is it time to really go all in and really buy the dip? And in my opinion, guys, we are not at the bottom, right? We are seeing some volatility that gives us an opportunity to be able to buy our favorite companies and our favorite ETFs and index funds at a discount, but there by no means are we, in my opinion, at the bottom. I think or at least what I'm going to be doing is every day that it's a red day, and that basically means every day that the stock market is trading at a negative, I'm going to be buying ETFs or index funds or my favorite companies, individual stocks. So every day I'm going to be doing that, or every other day, whenever I feel like it's the best opportunity, right? But the goal is every day, every other day to try to be buying if the market's in the red. And that's where we really, guys, build our wealth, right? We really build our wealth on the days the market is in the red, right? So we buy at these discounts and then we just hold those investments long term, right? And then as those investments recover, remember, we bought them down here at a lower price. As they start to recover and increase in price, that's where we make our wealth at. So when do you sell them? I don't know. That depends on your financial goals and your financial plan. For me, I don't sell them until I feel like I'm going to be using the money to live, right? As long as I don't need the money, as long as I don't need to sell anything in order to take care of my lifestyle or take care of my necessities, then I just leave it there and just let it continue growing. What we should be doing is continuing to earn this active income and then take that active income and keep buying these stock market assets while they're on sale. And I think we're going to have an opportunity to do that probably throughout 2022, guys. I'm no stock market expert. I'm no financial advisor. I'm just giving you my opinion. You guys do what you feel like is best for you and your financial situation. But for me, and the way I'm thinking, 2022 is going to be a year where the stock market it may end up being a negative year. I don't know, right? It may end up being a negative year. What we do know is inflation is still running rampant, right? Inflation is still increasing. So what the federal government is going to have to do is they're going to have to increase interest rates, right? To try to slow spending down. Problem is everybody got money. I ain't going to say everybody, but a bunch of people got a lot of money, right? We got all this stimulus money that's still left over. Everybody got money. And people are spending money, right? Sometimes people are spending money they shouldn't be spending. They should be investing it, but they're spending it on things. And as long as that continues to happen, inflation is going to keep running out of control. So the way the feds try to reduce inflation is by, at least one of the ways is by increasing interest rates, right? And if they feel like if they increase interest rates and it's more expensive for people to buy things or borrow money, it's going to be more expensive for people to borrow money, right? Because if in today's environment, I can go to the bank and get me a $10,000 loan at 4%, then, a month from now or in March of this year, if that same $10,000 is going to cost me 6%, I may be more hesitant to borrow that money and just leave it where it's at, right? So that's what happens, right? They increase interest rates and then people, they pull back. Whoa, man, this money is too expensive for me to borrow now, so I'm not gonna touch it. And that hopefully will stop people from spending so much, right? And what happens is when people are spending as much as they're spending, coupled with, the supply issues we're having, whether it be with automobiles, whether it be with real estate. Problem is we have supply chain issues, right? And that makes things more expensive. Let me give you a prime example. I was looking at a 2022 Porsche 911 GT3, 992 model. Now, you guys know I got a Porsche 911 GT3, but mine is a 2019 and it's a 991.2, right? So it's the old version. So I'm looking at the new version, right? My Porsche dealer right here in Fort Myers has one. And they want $85,000 over MSRP for it. Why? Because there's a shortage of them. There ain't many to go around, right? Same with any other premium product. Take Rolex, for example, right? Same thing with them. You can't buy a stainless steel sport model Rolex. You can't go into a Rolex boutique and just say, hey man, I want this GMT, or I want this sub, or I want this Daytona. You can't do it. Why? Because of supply issues. You got a lot of demand, low supply, which does what? Scarcity, right? So my point is, I think the stock market is going to continue to stay flat or negative through 2022, which will be a great opportunity for us to buy. Now, what am I going to be buying? I'm going to be buying Tesla if it gets under $800 a share. That's what I'm waiting on, right? That's my big one when I'm looking at individual stocks. My big one is Tesla. The next individual stocks that I may look at is bank stocks like Bank of America or Wells Fargo. Why? Because if Feds increase interest rates, guess what's going to happen to banks? They're going to be in a position to increase their rates. And guess what they're going to do when they increase their rates? They're going to make more money. We bring our deposits into their bank. We put them in our checking account. We put them in our savings account. And they pay us basically zero for those dollars. But then what do they do with those dollars? They take them and they lend those dollars out, or they invest those dollars overnight, and they make money on our money through interest income, right? So as the Feds raise interest rates, banks are going to raise their interest rates too, and they pass that on to us. They charge us more for the same money they're lending us today. They're going to charge us more for it tomorrow if interest rates go up. So I think banks are going to be, or financial service companies, specifically banks, are going to be in a position to make more money in the near future if rates go up. So guess what that does to their stock? Their stock price in most cases will go up as well. So bank stocks is my second that I'm going to do on individual stocks. It's Tesla first, then Bank of America or Wells Fargo, or a combination of the two. And then obviously I'm going to continue dollar cost averaging into my favorite ETFs, which is the S&P 500 ETF and a total stock market ETF and information technology, VGT, which is a technology ETF. Those are my three favorite ETFs that I'm going to buy. And then Tesla, Bank of America, and Wells Fargo are going to be my individual stocks that I'm going to buy. Drop me some comments, guys, and let me know what you're going to be buying if the market continues to stay in the red, right? Which I think it will. I think no time soon will it fully recover. I think you'll have good days, but then going to get boom, bad days again. So any day it's red, buy your favorite companies, man. Buy your favorite ETFs. Well, like I said, drop me some comments. Let me know what you're going to be buying. And again, if you haven't gotten those three free stocks from Weeble, click on that link down in the description box. Weeble's going to give you 3 free stocks valued up to $3,300. Plus, you're going to be able to then start buying your favorite companies and your favorite ETFs without any commissions on them, right? No trade commissions when it comes to using Weeble. So click on that link, go get that free stock, go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness, never stop believing in yourself, and I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.